What elements make up a consistent, profitable strategy? Today I'm going to show you, but be sure to stay to the end because I'm going to share with you a couple of top tips I have for it. As well, I'm going to share one profitable strategy that I have found and still use. Hi there and welcome to the Forex Collective. If you don't know me already, my name is Brian and I'm a full-time Forex trader who left his 9-to-5 job a few years ago. I upload tutorials on Forex like this one and upload weekly analysis. So if you have any questions, leave them in the comments section below, and if you haven't done so already, hit the subscribe button so you don't miss out on future videos. So a few weeks ago I was kind of looking at a couple different strategies that I knew were profitable and consistent over time, and I started dissecting kind of what are the overall elements that each one of these has. And I found a lot of similarities between them, so I just thought I'd share those today. So there's 4 of them. The first one, it's quite obvious, but you need a trade setup. So that involves patient trading. A lot of trading is just waiting. I would love nothing more than to be able to place, a winning trade every hour or every day, but of course that doesn't happen. It's a lot of checking your screen, just waiting for the perfect moment that meets your strategy and meets the criteria in your rule sheet before you make the trade. So that trade setup could be anything that you've back tested and found to be profitable. So that could be price action like support and resistance, Elliott wave, trend lines, candlesticks, geometric patterns, a combination of all the above, kind of like how I do it. It could be anything like that. So the key is every strategy waits for the right setup. Number 2, once we've waited for that setup, how do we actually trade it? So how do we enter it? And that could be any number of things. It could be a fib retracement. It could be a break of the low or the high. It could be like a 4-hour, 1-hour, or daily candle that actually closes below a certain key, resistance or support line that you have. It could be any one of those things. So but again, the key is to be consistent and always enter the same way, because when you back tested these results and got consistent profitable answers, you did it the same way every time, and you need to enter the trade the same way every time. So you need to be very consistent. Once we found an entry, now we need to place our stop. So if price turns on us, what criteria would make the trade invalid and invalidate your setup? Okay, so that's the important thing. Stop isn't always the closest structural high or as close as a stop as you can get. It's the stop or the level reached that invalidates your setup. Okay, so example, if you trade engulfing bars, so anything that invalidates an engulfing bar is if price retraces and makes a new high of that bearish engulfing bar. So that would be, where to place a stop. So in that case, it would be most likely a structural high. However, if a person enters on a fib retrace, there's going to be a subsequent high there that you could place your stop on. However, price could turn from there and go a little bit higher first, stopping you out, but not going higher than the engulfing bar and then turning. So that's an example of having your stop too tight and not really following your invalidation of your setup rules. Further to that is, okay, you've placed your stop and entered. Are we gonna move the stop at all? Are we gonna manage it? Some people like to manage it, some people don't. To be honest, I've been a little inconsistent myself with that. However, I've actually written down rules in place. I've now just started to move my stop to break even, and I'll very, very rarely now move it to a new, structure before target. The 4th one is, what's your target, right? So are we going to go for a structural low, a trend line, maybe a Fibonacci extension, or maybe like an Elliott wave pattern that you're going to see, or RSI, or a moving average crossing, kind of anything like that. You just need to, document it, and that's going to become part of your strategy, right? So those are the four things. So you need, a trade setup, you need the entry, you need the stop, you need a target, and you need them all to be consistent, and then back tested them all, and then only enter and manage trades just exactly how you back tested, right? So 2 top tips. The first one is definitely do not overthink it. Some strategies might call for more thinking than others. I prefer simpler strategies that it's quite obvious. You'll just see the price action and say, okay, price is gonna go down from here and it meets all this criteria, let's just go short, right? The worst thing you can do is start second guessing the strategy that you back tested to improved to work for you, right? Why are you second guessing something that you proved to yourself works, right? It's because we're afraid of losing money, right? We're afraid of being wrong, right? And the second tip that kind of builds on that is, every one of your trades needs to follow those elements and follows those rules that you did back test and found to be the best optimization of the way that you want to trade and works for you, right? So if you back test like a price action strategy and you've analyzed these 50 setups that have met your criteria, and you, looking back, you would have taken them and this would have been your results, then why does it matter what fundamental news event is coming up in an hour or the next day or the next day? Because when you back tested, you didn't look at those fundamental events. They were already worked into your back testing results. So why do you care about those now, right? Because we're afraid of losing. We're trying to, always get better. But with Forex and with certain strategies, you're always going to have losing trades. That's just the way it is, right? So accept it, move on, and just be consistent with yourself. So I'll share one of the strategies that I still use. Okay, so you'll see it in a lot of my weekly analysis videos. It's very simple. You draw major trend lines, right? And then when price gets to those trend lines, then I wait for a 4-hour, 12-hour, or a daily engulfing bar. Once that bar is formed, I then look at entering on a retracement of that, and then the target does vary depending on the price action and other things that have followed it before. But essentially that's my setup is trend line with candlestick. My entry is a fib, pending entry. My stop is usually that high of the engulfing bar or low, and then the target does kind of vary. But that's one strategy that you can go with. So you're always trading with the trend. And look at my weekly analysis videos if you want to see how I use that setup in my trades. So there we are. There's the 4 key elements to making a profitable strategy, and I'll see you next time.